And I think basically over the next 5, 10 years, it's going to kind of behave like that, where it surprises bears to the upside, where it just gets bigger and goes on for longer than they think. Um, but it doesn't mean that basically bulls are going to be entitled to 5x multiple gains in like a typical 12-month period. It's not on that kind of easy 4-year clock as it was for a period of time. And I think even the 4-year cycle, and I've done research on this. Um, the last couple cycles, it was kind of a blend of the halving cycle and the liquidity cycle. And so as basically we have the kind of the importance of one declining to the point where it's almost negligible now, and then those other factors kind of gradually increasing in prominence as they affect Bitcoin's price.
According to Lyn Alden, the market's recent actions have fueled the discussion about whether Bitcoin is headed for a crash or is preparing for its next significant bull run. As hope that the US government shutdown is finally coming to an end, Bitcoin surged more than 5% overnight, regaining levels above $106,000, with prediction markets indicating more than 85% likelihood that operations will resume this week. Traders are growing more optimistic that the 40-day standoff will bring new liquidity back into the system. Risk-on mentality has been reinforced by President Donald Trump's statement that the majority of Americans will get a $2,000 dividend. Many anticipate that this infusion of capital will increase market activity. Bitcoin bulls are now concentrating on the $110,000, $112,000 range, a significant liquidity pocket that might spark the next leg up, since billions of dollars in treasury cash are expected to return to circulation once the government reopens.
So I don't think we're in like a full-on bear market. I think we're obviously in a weak portion of the cycle, and Bitcoin has been roughly flat for 12 months now. It's kind of had a lack of catalyst. It's kind of one of those things where, it gets ahead of itself for a period of time and then corrects. And some of those corrections go on for 6+ months. This one basically went on for 12 months, even though there were new highs along the way. I've kind of been in the camp of always kind of being a bearish bull, which is I try to avoid price targets, more focused on direction because you can't necessarily predict like illiquid moves and kind of euphoric periods or kind of lack thereof. But when I do get kind of cornered into giving a price target, I think one of my main ones was 150K for this year. So it looks like we probably not going to touch that, but like John said, we still have 2 months to go, so we'll see what happens. And so that's like, we hit 125 or change. I had a similar thing last cycle where at first my target was a trillion market cap, which was somewhere in the ballpark of 50K. We touched that. And then I gave a target of, I think we'll hit 100K. That was still lower at the time than many of the bulls. We ended up not reaching that. We ended up only getting to 69. So far we're kind of in a similar thing where we kind of hit initial bullish targets, new highs and all that, but then kind of stagnate a little bit. I generally wouldn't look too much into this whole kind of 4-year cycle aspect. As the halvings continue, the new supply is a much smaller component of the total supply and demand out there. It's more about what price will unlock coins from existing holders, either because they want to sell into bullishness or because they're selling into weakness. They're afraid of their position. Either one. That's the type of thing that can really kind of affect price more so than what is the kind of the rate of new coins hitting the market at this point. In addition, prior cycles, because it was a much smaller illiquid market, and with kind of in general on average less sophisticated kind of participants, not necessarily in terms of like intelligence or anything like that, but in terms of hedging, in terms of kind of how they tend to rebalance and stuff like that, we had kind of more non-financial people involved. Basically, people that are sophisticated in other areas, not in terms of like sort of portfolio management. It didn't really follow normal rules of assets. Whereas now that it's kind of held by those who tend to hold other assets, they tend to treat it like they do other assets, which often results in rebalancing and things like that.
Yeah.
And so in prior cycles, like the market cap would get way ahead of the on-chain cost basis. And so it kind of like some of that price spike would be ephemeral because it's like it didn't really reach that price on a sustained basis. It was just kind of like a small number of coins would then, when you extrapolate over the whole market cap, kind of say this is the current price, but it wasn't like a price that was kind of a very illiquid price. And so I think we're past those kind of periods of just massive disconnects. We still have the on-chain average cost basis inching up at this phase. So I generally think that while it's been weaker than expected, I generally view that the cycle is going to go on longer than expected because I think we're driven by other things, ranging from regulatory actions, ranging from liquidity, ranging from all sorts of other things, fiscal, economic stuff, and very much less so to a nearly negligible degree the supply halving cycle.
Heavy. Sell-side liquidity is concentrated between $111,500 and $115,000, according to Coinblast's market statistics, making this area the battleground to keep an eye on. According to analysts, if Bitcoin can surpass $115,000, there might be a big short squeeze that might push the price all the way up to $117,000. Bitcoin's recent weekly closing above its 50-week moving average, a historically significant signal pointing to a more significant trend shift, strengthens the bullish thesis. As macro conditions start to stabilize, traders think that a clean breakout above the upper liquidity band could change market sentiment and trigger a robust rebound. Alden wants to know if this momentum represents the beginning of a long-term trend or if it's just another liquidity-driven surge that could reverse.
Yeah, I think an example to be familiar with is the Mag 7 stocks. Basically, these really kind of mega cap US tech stocks over the past 15 years. For a lot of them, if you ask, what cycle were they on? I mean, not a
Yeah.
particularly, specific cycle, and the booms and busts were muted, because they started from a larger base than Bitcoin was, 15 years ago. And they've gotten, some of them to a larger market cap than Bitcoin is now. And um, they've traded in traditional markets. And if you ask people, before the idea of $1 trillion company was, an extreme thing. And now, companies have been over 4 trillion. I think Nvidia might have touched 5. I'm not sure, but several have touched 4 at this point, and more have touched kind of 2 and 3. And so a lot of these companies over the course of 5, 10, 15 years reached heights that most people did not expect them to. And they just kind of kept like every time they would say, okay, this price to earnings multiple is a little bit high, or this is kind of concentrated. For a period of time, it might cool off for 6 months or 12 months, and then it just has another rip higher because it's fundamentally being adopted, whatever kind of product or service they had. And I think Bitcoin's kind of in that phase now where, there are some bears that are saying, 2 trillion market cap, that's kind of enough. How could it possibly go higher than that? It's magic internet money. How could it go higher? Kind of like how could a phone company, like Apple, how could that, get as high as it is, or how could an operating system company like Microsoft get as big as it does, or um, and I think basically over the next 5, 10 years, it's going to kind of behave like that, where it surprises bears to the upside, where it just gets bigger and goes on for longer than they think. Um, but it doesn't mean that basically bulls are going to be entitled to 5x multiple gains in like a typical 12-month period. It's not on that kind of easy 4-year clock as it was for a period of time. And I think even the 4-year cycle, and I've done research on this, um, the last couple cycles, it was kind of a blend of the halving cycle and the liquidity cycle. And so as basically we have the kind of the importance of one declining to the point where it's almost negligible now, and then those other factors kind of gradually increasing in prominence as they affect Bitcoin's price.
After Trump's stimulus announcement, XRP saw a sharp increase to $2.53, while Bitcoin continues to gain strength. However, underlying evidence indicates that the rise may be waning. Long-term holders' profit-taking has increased by more than 240%, with daily realized profits increasing from $65 million to over $220 million. The price dropped 25% from $2.39 to $2.30 at the same time as this rise, indicating distribution during weakness rather than conviction buying. Additionally, according to Glassnode data, Whales with 1 to 10 million XRP have reduced their holdings by almost 500,000 tokens in just 2 days. Whale sales, however, seem to be tapering off after $650 million in outflows, suggesting that a possible bottom may be formed. XRP may try to climb toward $3 once more and raise expectations for a wider rebound if it can overcome the heavy supply zones at $2.80 and $2.90.